Welcome to Yes, I Can Do It. Transform your financial future. Financial independence starts here.
Hello everyone, welcome back to Yes, I Can Do It. Today we're diving into how to potentially earn an extra $1,000 a month, passively, from your stock investments. We'll break it down with exact steps, tips, and strategies, complete with numbers, so you can walk away feeling like you can actually do this. Let's get started. Step 1 is setting up your investment account. This is the foundation, so it's crucial to get it right. Think of it like buying a house. You wouldn't just buy the first one you see. You'd shop around, compare prices, and make sure it's the right fit for you. There are tons of options out there like eToro, Robinhood, TD Ameritrade, Fidelity, and more. Each platform has its own pros and cons, whether it's fees, features, or the types of investments they offer. Start by figuring out what's important to you. Do you want a platform that's super easy to use even if it means sacrificing some advanced features? Or are you comfortable with a more complex platform if it means saving money on fees? Once you've chosen your platform, the next step is actually opening the account. This part is usually pretty straightforward. You'll need to provide some basic information about yourself, like your name, address, social security number, and answer some questions about your investment experience and risk tolerance. Finally, before you hit that submit button, make sure you actually read through the platform's terms and conditions. You need to understand things like what fees you'll be charged, how your investments are protected, and what your rights are as an investor. It's always better to be safe than sorry, and taking a few extra minutes to read the fine print can save you a lot of headaches down the road. Now that you've got your investment account all set up, it's time for step 2, defining your financial goal. This is where we get specific about that $1,000 a month. Think of it like this: if you were going on a road trip, you wouldn't just hop in the car and start driving without knowing where you're going, right? You'd have a destination in mind. In this case, our destination is that sweet $1,000 monthly income. To earn $1,000 a month passively, we need to figure out how much to invest. Let's assume a 10% annual return. To earn $12,000 a year, we'd need to invest $120,000. I know that might sound like a lot, and it is. But remember, this is a long-term goal. We're not going to get there overnight. Start with what you can, even if it's just a few $100s. The important thing is to start somewhere and to be consistent. The more you invest, and the longer you stay invested, the more likely you are to reach your goal. So, you've got your investment account set up, you've defined your financial goal, and now you're ready to start picking stocks. With thousands of stocks to choose from, how do you even begin to narrow it down? One way to achieve that is by focusing on dividend-paying stocks. When you buy a dividend stock, you're essentially buying a small piece of a company that pays you a portion of its profits, usually every quarter. It's a way to generate passive income without having to actively manage your investments on a daily basis. Not all stocks pay dividends, and even those that do can vary widely in their dividend yield. Focus on companies that have a history of paying dividends consistently. Look at their dividend payout ratio, which is the percentage of earnings that a company pays out as dividends. A payout ratio that's too high could be unsustainable in the long run, so you want to find companies with a healthy balance between paying dividends and reinvesting in their growth. And finally, do your research on the company itself. Are they in a growing industry? Do they have a strong management team? Are they facing any major challenges or competition? These are all important factors to consider before investing your hard-earned money. We've talked about setting up your investment account and defining your financial goals. But here's a crucial piece of the puzzle: diversification. Even if you find the most amazing company, putting all your eggs in one basket is risky. Spread your investments across multiple stocks. This minimizes the impact if one company goes down. Diversify across different sectors like technology, healthcare, energy, and consumer goods. You can also diversify across different asset classes. Stocks, bonds, real estate, and commodities build a strong and resilient portfolio to weather market storms. Achieve your long-term financial goals. Now let's talk about actually putting your money to work and some smart investment practices. One of the most common questions I get is, how much should I invest? It depends on your income, expenses, and overall financial situation. But here's a good rule of thumb. Invest what you can afford to lose without sacrificing your essential needs. the stock market is inherently risky, and there's always a chance you could lose some of your investment in the short term. That's why it's important to only invest money you don't need for immediate expenses like rent, groceries, or bills. Another smart investment practice is to invest consistently. Instead of trying to predict when the market will go up or down, focus on investing a set amount of money at regular intervals, regardless of what the market is doing. This is called dollar cost averaging, and it's a great way to reduce your risk and potentially increase your returns over the long run. You're investing consistently, regardless of the market's ups and downs, which can help you average out your purchase price over time. Remember how we talked about dividend-paying stocks and how they can help you generate passive income? Well, here's where things get really interesting. Reinvesting those dividends. When you receive dividends, you have two options. You can either pocket the cash and spend it, or you can reinvest it back into buying more shares of the same stock. When you reinvest your dividends, you're essentially buying more shares of the stock, which means you'll receive even more dividends the next time around. It's a beautiful cycle of compounding growth where your money is literally making you more money. Even small amounts of money, when reinvested consistently over time, can grow into significant sums. Let's say you invest $1,000 in a stock that pays a 4% annual dividend. That means you'll receive $40 in dividends in the first year. If you reinvest that $40 and the stock continues to pay a 4% dividend, the next year, you'll earn dividends on $1,040, not just your original $1,000. So, you've set up your investment account, defined your goals, picked your stocks, diversified your portfolio, and even started reinvesting those dividends. But here's the thing about the stock market, it's constantly changing. That's why it's crucial to stay informed and monitor your investments regularly. I'm not saying you need to become a day trader glued to your screen watching every tick of the market, but it's a good idea to check in on your portfolio at least once a month, or even better, set up alerts so you're notified of any major price movements in your holdings. Monitoring your investments isn't just about watching stock prices, it's also about staying informed about the companies you're invested in. Are they still performing well? Are their dividends safe? Are there any new competitors or challenges on the horizon? There are tons of resources available, from financial news websites and apps like Bloomberg, Wall Street Journal, and CNBC, to investment research platforms like Seeking Alpha and Morningstar. The key is to find a few reliable sources of information that you trust, and make it a habit to check in on a regular basis. And there you have it, a breakdown of how to potentially earn $1,000 a month from stock investments. By following these steps, you can work toward your goal of earning $1,000 a month from stock investments. Remember, investing requires patience and consistency, so keep learning and refining your skills. If you found this video helpful, please like and subscribe for more investment tips. Thank you for watching, and see you in the next video.